Welcome back. I'm Pratap here. Today is the 28th April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, please note we are providing complete free training on supply demand zone price action, and it is a highly expensive training course, but we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. To access the training lessons at our channel homepage, click on the tab Posts. Some of you might be seeing Community tab. Click on that tab. Then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. Here I kept all the training lessons. You just scroll down to the bottom of the page. Here starting from lesson 1.1, all the lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. So from the video description, click the Telegram channel link and join at our Telegram channel. Once you join, at the top of the Telegram channel window, you can find pinned messages. And go to the pinned messages, and one of the messages are having all the training instructions. Please learn this course according to those training instructions. Then only you will become a very good independent trader in the coming months time period. Please make use of this opportunity. Okay, now let's get into performance evaluation. In the previous end of the day report, we identified 10 high liquidity zones from daily and 75 minutes time frame. Out of these 10, today we got a trade from only one stock, that is Grasim. That too, it is a fine-tuned dynamic zone. You know what is a dynamic zone? You already learned in lesson 21. Okay, the fine-tuned zones or new fine-tuned zones created during the live market, we are calling them as fine-tuned zones. Sometimes the same fine-tuned area during the same day prices will retrace. From there it will give you good trades. So first let us look into this. Even before that, last session we got a trade from a high liquidity zone here. Let me directly go to that high liquidity zone. This is the 5-minute zone, and this zone is also slightly pierced. So once it is pierced, this is not valid for HLQ zone strategy. So I am deleting. Just want to tell you, the last Friday itself this is violated, pierced. And okay, now how we fine-tuned in the market, already we have drawn this zone in the previous, this rally base drop. So this is the 75-minute zone. Within that area, today a rally base drop is created. This is the one. And this is the 15 minutes fine-tuned zone inside the 75. Of course, 75 is inside the daily zone. But the 15 minutes is not good enough. It should have a fine-tuned 5-minute zone. Go to the fine-tuned 5-minute zone. Here we have a rally candle, 3 base candles and a drop candle. And I also got confirmed by looking into even 3-minute zone. See, 3-minute zone also you have a rally, base, drop candle. And then came down, prices came near to the zone and again came down, and finally we got the trade. But anyway, 5 minutes is okay. We have a rally, 3 base candles, drop, follow through candles. But when we got the trade at 12:15. And when it achieved the target, actually there is no 15 minutes target we didn't. The reason is the 15 minutes target is very, very far away. So we don't have a proper 15 minute structure. See, this is failed ERC. This is not a base candle. Here you want to consider, maybe you can, but not really happy with this leg out candle. Is it a medium size or a large? We are in a dilemma. The real 15 minutes structure here, we have a rally, 3 base candles and a rally candle. This is a confirm. And that in the mid trading session we got the trade. Entering into this zone is not practically, it is not possible. Morning 9:30 before 10 o'clock, if you get a trade, volatility is very high. It will definitely push up to this 15 minutes many times. But this is the trade at 12:15 you got the trade. So that's why you should focus on the 1:3 RR. Achieving 1:3 RR itself is very good. So that's why I have drawn this tool. Which tool? Short position tool in the trading view. I have drawn entry including the stop buffer. This is the stop buffer value, and also we should calculate the risk because the risk should not be beyond 2%, and this risk is 1.4% as per one futures margin cost. See, yesterday our training lesson I told you the risk management calculations as per futures and the risk management calculations as per equity stocks without any margin. With margin, see, equity with margin and futures are almost similar. There won't be any major small differences will be there, not much differences. So that's why without margin and futures comparison we did in our yesterday's discussion. I mean, not discussion, in our training lesson. Yesterday's training lesson, that is lesson 29.8.1. So as per one futures margin cost, it is 1.4% risk. If you took in the equity stocks without any margin, probably the risk will be 5 times lesser. 1.4, maybe you might have got around 0.5% risk. This zone might be having only 0.5% risk. As per equity stocks without any margin during the intraday. So that's why you should be very, very careful in understanding these concepts. See, if you are into the stock market for a long time, at least last 2-3 years, you might be knowing all these concepts. But recently, if you are learning the concepts, you may not be knowing the differences. So if that is the case, please complete our yesterday's training. Even today also, morning I released a training lesson, continuation to the yesterday's session. Today I compared, today's morning the training lesson I released, in that I compared equity charts and the future charts. How we analyze in the equity chart and how we take trades in future charts. Analysis is in equity, but taking trades in futures. How we do that? That mechanism I explained. So those who are not aware of that kind of mechanism, please listen the today's morning training lesson. Okay, anyway, today prices entered into the zone. When they entered at, let me go to 1 minute time frame. You got a trade exactly at 12 o'clock, 19 minutes you got the trade. Prices entered in the zone. Then slowly they are moving. And see here, price did not reach 1:3 RR. If you calculate up to here, it is 1:2.9. Of course, many people might be happy with that, 1:2.9. But still, if you are expecting 1:3 RR, lot of patience is required. I've been waiting, I've been watching this stock. And finally, it reached the target, 1:3 target at 1521 candle. It is a real test for a trader's patience. If you are having enough patience, you would have got a very good profit in this stock. Decent profit you would have got during the intraday 1:3 RR. What is the profit we got? Grasim gave you 5,175 rupees. This is as per one futures margin cost. And the ROI 4.2% as per one futures margin cost. Because always we calculate the margins based on one future's margin cost and also one lot size. For one lot, futures lot, this is the profit for one futures lot, 5,175. And when you got the trade at 12:20, you got afternoon 12:20, you got, and finally the last closing hours of the market, few minutes before the market closing, it reached the target. If you would have taken a trade in equity segment, in cash segment, in cash segment, you might have exited your trade somewhere in this candle or in this candle. Because the 245, most of the brokers will be closing the positions if you take a trade. 245 means somewhere in this candle you might have exited. 244, definitely you would have exited here. Still, if you exited, maybe you missed achieving 1:3 RR, even then you would have got a profit, maybe around 4,800 rupees, something like that, you would have got profit up to here. But those who have taken a trade in the futures, you can hold. During intraday, you can hold till the last minute. So that's why I'm saying at 15:21, it reached the target. Exactly 1:3 achieved. See, after 1:3, again sharply it moved. Again closing 330 candle, 329 candle. The closing at 330 is also at 1:3 RR level. But anyway, planning your trade to exit at 330 is real dangerous. Sometimes before market hour ending, your trade may not be executed. If market close, that's it. You have to carry your position to the next day, next trading session. Okay, this is about Grasim and remaining stocks. Let me quickly show you, but one stock is violated. That is Manappuram. We know that the zone will be violated. Manappuram is a 75 minutes high liquidity supply zone. The failed ERC drop candle, dynamic viewpoint of view, is a leg in. You have 4 base candles and a drop candle. And within this 75 minute zone, we fine tuned with 15 minutes. Actually, the 15 minute structure also I am not happy. I consider all these candles as base candles. This is also small candle. Maybe this is a valid leg in candle. Leg in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Some 9 or 10 base candles are there. Even then, if you consider this as a medium, in case if you consider this as a medium size candle, this is a medium size base candle, if you consider like that, and if you draw this is a leg out and follow through, even then in 5 minutes, structures are not good. Look into the 5 minutes. See here you have a failed ERC candle, a medium size candles. This structure also is this is a 3 minutes, 5 minutes. Go to the 5 minutes. So failed ERC candle, drop candle, another failed ERC candle, drop candle. The 5 minute structure is also not good. First of all, 15 minute structure is not good. Even if you compromise and draw this 15 minutes, 5 minute structure is also not good. I just want to show you, that's why I have drawn. But from my side, if you ask me, I leave my analysis here itself. I don't draw 15 minute zone. I consider this entire thing as a consolidation. It's a very weak area. In a weak area, you cannot plan your trades. That is quite dangerous. Several times I told you, if there is a price, some moved up and again go down, again move up, again go down, such kind of price action is there, you can plan your trade. In a narrow range, prices are moving. That is a quite dangerous area. That entire thing should be considered as a consolidation in the market. So you will be having a weak order flow in this area. Okay, anyway, we know that this zone will be violated. And remaining stocks, Let us look into them one by one. Apollo Hospital, this is a daily high liquidity demand zone. We have a rally base. Software identified this as a rally candle. Why? See the close of this candle at the hidden body. If you add the hidden body, it is a rally candle. This body may result as a wick. That is dynamic viewpoint of view. And follow through candle is there. And this is the area fine tuned with 75 minutes time frame. 75 you see drop 1, 2, 3, 4 base candles. Again you add the hidden body, it is a rally candle. And within this 75 minutes again fine tuned with 15 minutes time frame. In the 15 minutes there is no proper 15-minute structure here. See the structure is that data is not good here. All these candles, it's a bad structure. But from where it picked up the orders? So the moment you go to the 5 minutes, you get clarity. So in the 5 minutes, you see you have a rally, base rally. Prices moved, again picked up the orders, and again moved up. And again this during this daily demand zone, high liquidity demand zone creation, it picked up the orders from this and sharply moved up. Not only that, again one more LOTL 5-minute zone is created here. Drop base rally. Of course, it is not a fine-tuned zone, but this is an indication that some new orders again added here. So that way this LOTL area, this lower time frame zone horizon area, you can plan your trade. But anyway, price did not enter into that zone today. Today price did not enter into the zone. This is the daily candle. So we didn't get a trade. Biocon is also, we did not get a trade. How our software identified a drop base rally. This is the high liquidity zone. This zone is having multiple order flows. How we got the multiple order flows, let us discuss. Look into the 75 minutes time frame. Here, drop base rally is created. Drop base rally in the recent, when last Monday, 1 week back, this zone is created. But here also you have a zone. You have a rally candle, you have a base candle. See, you have again a big rally candle, follow through candle. So base candle and leg out candle in rally, base candle and leg out, whichever is having the low, that low will be considered as a distal line. That is what you learned in lesson 4. You have learned lesson 4, all the patterns, 4 pattern rules you have learned for drawing the distal line. So that's why the lower wick of the leg out, we have drawn the 75 minute zone. So that way you have two 75 minute zones. But remember, if you look into this 75 and this 75, what is the difference? This is the LOTL zone. That's why the 75 minute zone actually I didn't draw here. I didn't draw drop base rally, I didn't draw. These are the 15 minutes order flows. The one I have drawn is, this is the one, rally base drop. Okay, now go to the 15 minutes time frame. In the 15 minutes time frame, here I have drawn drop, 2 base candles and a rally candle. Drop base rally. So this is the 15 minute zone. This entire thing is 15. Inside 15 you have 2 5 minutes order flows are there. That we will see once we move on to 5 minutes time frame. But before that, look into this 75 minutes in this area. We don't have a proper structure here. See, this is a failed ERC rally candle in dynamic view. Again rally, no base candles in between. But at the distal line of the 75 minute zone, we have a lower time frame zone horizon. Which time frame? 15 minutes horizon. Rally, base, rally. This 15 minutes horizon is the responsible for the creation of this 75 minute zone. So that's why this 15 minutes order flow is having a lot of importance. Okay, but 15 minutes zone is available, that is not enough for us. It should have a fine-tuned 5 minute zone. Let's go to the 5 minutes time frame. Okay, first we will look into this 15-minute zone. Inside 15, you have two 5 minutes order flows. So here you have a rally, base, rally. And also here you have a drop, 1, 2, 3, 4 base candles. Actually origin is started from this candle, but okay. But here you have 1, 2, 3 base candles. This is also you can consider base, but origin is started. But have you noticed with the small gap, pro gap here? That's why I'm having a lot of interest on even on this zone also. Okay, drop base rally and rally base rally and follow through candles. This is having pro gap. And what about here? This lower time frame 15 minutes horizon, we have a fine-tuned 5-minute zone, rally base rally. This rally base rally is having this is the fine-tuned zone inside this 15 minutes horizon. Not only this 15 minutes horizon, the fine-tuned 5-minute zone is also an horizon for this entire 75 minutes fine-tuned zone. Actually, from this fine-tuned 5-minute zone, it picked up the orders and then sharply moved up. So that's why this one. And I'm not really convinced. Some of you may ask, why can't we draw rally, base, rally here? I'm not really convinced with this candle. Maybe a little bigger could have been. I'm in a dilemma whether it is a medium size. Not really convinced with the large candle. But see, I'm comparing with all the other candles. That way I will generally look into the candles. Of course, it is looking like a big, but not big enough to consider leg out. Maybe this is a bigger among the medium size candle. See, within medium, we might be having several ranges, right? Maybe this is the biggest among the medium size candles. So that's why. Anyway, this is the actual horizon. So I'm just sticking to this rally base rally. If this is a little bigger, I would have drawn one more rally base rally, one more 5-minute zone I might have drawn here. But this is good enough. But anyway, prices did not enter into the zone today. Next one is Escorts. This is also a daily high liquidity zone. Our software identified this as a drop, base, rally. And this daily zone is fine-tuned with 75 minutes. Here 75 minutes, a drop candle, base candle, rally candle. This is the 75-minute zone. Within the 75 minutes, we have a 15-minute zone. So here we have a drop candle, base candle, two base candles and a rally follow through candles. Picked up the orders, moved up. Picked up the orders, moved up. Maybe acting as a high liquidity area. Let's look into the 5 minutes time frame. In the 5 minutes time frame, we have a fine-tuned 5-minute zone. See, we have a rally, two base candles and a rally candle. Did you notice again LOTL zone is created here? Drop, three base candles and rally. Or you can also consider rally, base, rally outside the zone. So that's why anyway, it is a LOTL zone is created and once again it picked up the orders. See, sharply prices moved up, not even entered inside. So maybe it could be a high liquidity and even after second test also, the huge rejection here and the very good move out of the zone. So definitely you can plan a trade, but today prices did not enter into this zone. So this is about Escorts. Next one is Sinjan. Sinjan I didn't draw the zone because it is a 2013 zone. Sorry, 2022 or 23. 2023 I guess. Yeah, in the year 2023. So 2023 we won't be having 5 minutes data. So that's why I didn't show any interest on this stock. I just left it. Next one is Grasim. Already we discussed. We got a trade, the dynamic fine-tuned zone. Next one is Sun Pharma. Sun Pharma structure is also not good. Yeah, this is also violated, right? Yeah. I think I didn't really looked into this stock after the analysis. Finally, this is violated. Anyway, at the time of analysis, I know it is this zone will be violated. Rally, base, drop, follow through candle. This one is fine tuned with 75 minutes. 75 minutes we have a drop, base, drop, and this 75 minute zone is already violated. See here, I mean pierced, already pierced. So that's why we didn't plan any trade. We know this zone will be violated. That is what happened today, because there are no order flows. Next one is a CG power. This is a 75 minute zone. Rally, two base candles and rally. This one is fine tuned with 15 minutes time frame. See here you have a drop, base, rally, 15 minute zone, follow through candles. And also here also you have a 15 minute zone. You have a drop, two base candles and a rally candle. So both these 15 minute zones are LOTL zones. Now go to the 5 minutes time frame. So in the 5 minutes time frame, here we have rally, two base candles and a rally candle. And now this 5 minute zone is the horizon for this newly created LOTL 15 minute zone. This 5 minute zone. That means this 5 minute zone order flow is very strong. Not only that, if you observe carefully, again a drop, base, rally is created, LOTL 5 minute zone. So this is the way you can draw this zone. From where it picked up from this. So this is the first 15 minute zone, this is the LOTL zone. Both are overlapped. Risk management point of view, you can't handle the risk by combining both. That's why in LOTL always the upper one we will delete. Many times prices reach up to here. If you have any fear price may not reach, keep some entry buffer before that and then plan the trade. After keeping the entry buffer, if the risk is within your accepted limit, then you plan the trade. Because of LOTL, new order flows are already added. Because this is also horizon to this 15 minute zone. That way also it might have got a huge order flow into this. So this is the area we want to plan our trade. But anyway, today price did not enter into this area. Next one is ICICI Prudential. This is also 75 minutes demand zone. Here. Drop, three base candles and rally, but I didn't fine tune this zone. That means the order flow is not good in this area. See here, we have a drop, we have a rally, no base candles here. So that's why I didn't. Actually, a drop base rally is valid. Why I didn't draw? Is it any because 5 minute structure is not good? Let me check. I didn't remember why I didn't draw. So this is the 15 drop base rally. Sorry. This is 25 minutes time frame. I looked into a wrong time frame. I am sorry. Go to 15 minutes time frame. Why I didn't draw? See here. This is a drop candle, rally candle, in between no base candles. That's why I didn't draw any zone here. And here also the structure is not good. See here, failed ERC candle and a rally candle, in between no base candles. So that's why there are higher chances this zone might be violated. So that is the reason why I didn't draw this zone. Okay. Next one is a Tata Steel. This is a 75 minutes. Tata Steel is not having a fine-tuned 5 minute zone. That we will see. First of all, 75 hour software identified rally, two base candles and rally. So within this area, fine-tuned with 15 minutes time frame. 15 minutes, you have a drop, three base candles and rally. So within that, go to the 5 minutes time frame. The 5 minutes structure I am not happy because see here, This is a drop candle. This is a rally candle. In between, no base candles. Previously, prices entered into the zone, but here also it is a pivot. A new zone is not created. No dynamic zone here on that day. So that's why we don't have any interest on this area. And the last one is Manappuram. Already discussed, right? Manappuram, we know the zone is violated. That is what happened. So these are the high liquidity zones from our previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.